Before we get into it, if you enjoyed these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. All right, folks, here we are on Wednesday, February 19th. We're going to take a look at AG today. So AG got on my radar because it came up on my scanner here on Thinkorswim. We'll shoot back over here in a minute after we take a look at the Webull side of things, but we have quite a lot to get through on Webull, so let's start here. Now, levels-wise, obviously AG has been, let me zoom out here, it's been a bit dippy for a while, right? See all this dippy, and it was up here in the 20s or near 20s for a period, and then sort of settled in for a while in the low teens, and then came down to single digits and has been there ever since. Did dip down near 4 relatively recently, if we want to call it a year ago, relatively recently. But when it did dip down to 4, it had an earnings and it shot up to that 842, and then on the peel back here, it tried to recover and then it fell down and came back to 442. So it didn't come down all the way, but then it had a little bit of a run and came down with a near double bottom, and then it shot back up to 8 again. And I'm wondering if now that it's peeled back, consolidated, peeled back again, and now is in a consolidation phase, if it is maybe putting in something relatively similar to this double bottom, or near double bottom, however you want to call it, with this and this. Now, this candle is today's candle, so what this looks like tomorrow, I don't know. Right, I'm like very much in real time looking at this. There isn't anywhere to maneuver beyond, is this candle itself this double bottom or this near double bottom? I don't know, but it certainly has the potential to be. Now, the other thing is putting in a strong hammer, right? A strong wick up here. To me, this one looks pretty hammery. This one, probably the body's a bit too low to be a hammer, but it still was a strong wick up on that day. So where the buying pressure was coming in back here in the mid 4s, buying pressure, for the moment at least, seems to be coming in like the 5.25 or so. And so if that's the case, there is earnings tomorrow, I believe. I think it's in the morning. I think it's pre-market earnings call. Don't quote me on that, double check. But, I thought, given the structure here of what we're seeing, and comparative, to the previous situation here, and earnings coming up, it could be a quite interesting setup. And it is, really low in terms of where it has been in the past. We just scrolled left, so we don't have to do it again, nauseate everyone. But levels-wise, I have this 514, that's the low here on this day, that strong wick up that I was talking about. So might it have to come back down there and like fully hit that? Maybe. It probably, if things get a little volatile during the call tomorrow, or just sort of like immediately before, immediately after, maybe it stretches to or through that. We oftentimes see these crazy reactions one way and then it, sprints the other direction. And so who knows sort of like what that will look like. It might look like a very big candle, who knows. But 514 being there, and then 583, that's where a bunch of this price action has been put in. Above that, I have 625, 660, and then that approach to 7, right? 694, and then that approach to mid 7, 743, 805, back to the swing high here. So those look like potential levels for me. Extending beyond that, there was 985, that's sort of like a goalpost, right? That's so far away. There certainly are some other levels in here, like this one looks pretty obvious. 837, probably even like this whole range, like 815, up to, like mid 8s. So probably that stretch, honestly, from 8 to 850 is probably quite sticky. But if it gets there and you were in the fives, you're probably feeling quite okay anyway. So taking a look at the EMA side of things, obviously things are in a bearish formation at the moment, so nothing to really write home about here from a bull's perspective, but that 183 is situated at 603, so it would need a pretty big percentage gain to get to and through that 183. It's the gray EMA right here. But it is within shooting distance. It was just there a few months ago, came down, tried to catch support there a couple of times, couldn't, but immediately made a move back toward it. And so it hasn't fully left it behind. It hasn't let me see if there's an example. Yeah, it hasn't bled through it like this, right? It kind of fell through and then it immediately started trying to nudge it again. And that's where we are at the moment. So to me, it looks like it's within striking distance. Volume is looking good, right? There's a lot of volume in here while it's been sort of roller coastering. And certainly is consolidated in this range. And it's a, decent-ish range, say 5.25 or so, up to the approach towards 6, right? So, some room to move there, percentage-wise, but it is that range that it's consolidating in at the moment. Volume-wise, we pull back here to incorporate this dip down to the 4s. There's a lot of shelving right above where it is. So how much of that is going to be contributive if it gets back in there again, versus how much selling pressure might that induce? I guess it will depend, but there certainly seems to be a lot of willingness to act, be very proactive trading in both directions, which then just sort of keeps it in this range. The buyers are happy to step in down here, sellers are happy to unload up here, and that sort of keeps it within this range. But curious to see who gets exhausted first, right? Do the buyers down here get exhausted and then it sort of falls, or do the sellers who are looking to sell up here get exhausted and then it pushes through? There certainly is plenty of room to move up here if it wants to, so that could be quite interesting. I don't know if it will be, but it could be. As isn't so terribly uncommon, a little bit of large-scale orders coming out today. We've been looking at a lot of these and looking at recent earnings and just seeing a lot of large-scale orders sort of dumping in the day before earnings come out, and then sometimes piling back in after the earnings report comes out and buying back those shares at a much, much higher price. So interesting. This is also pretty interesting. If this gets a little leggy, there's a lot of volume up here to 6 of these folks that are sort of mildly underwater. Is there sort of appetite there for those folks to dollar cost average down? Now, probably wouldn't be an intense dollar cost average down. They're probably not sort of splitting their loss in half, or who knows? It depends how heavy they come in, but it's not a tremendous gain, right? If a bunch of the volume is right here, that's perched just above where the price action is. But this being less than 7% total profited shares proportion, it at least leaves the door open for because you wonder where buy volume is going to come from. Obviously, if there's a good earnings report that could drive some large scale orders come in, that's super helpful, obviously. And then it could drive, like I said, some folks who are willing to either buy at a similar price as they did before, have a sort of slight dollar cost average down, or maybe even try to ride the train. If the stock jumps and gets above where they were in previously, maybe they try to pile in, even if it dollar costs average them up a little bit, maybe they want to try to catch it, aka they're chasing it. Be careful chasing. As I was saying that, I was I'm saying other people might do it, but I don't know that I should be. Felt a little too much like I was advocating for it, so I don't know. But don't chase. Make solid decisions. But yeah, obviously the stock has drawn down quite a bit from the 8s, and so is there room there? For sure. Will the catalysts be the savior and come in and actually do some of the heavy lifting here? That is what remains to be seen. Now, this is how it got on my radar. Like I said, it came up in my scan here. The scan is looking for stocks where the TTM squeeze indicator is triggering. And here's why this is pretty interesting to me. It's mid to low in the channel. It is, for now at least, wanting to catch support off of the put trigger. Obviously, if it falls below the put trigger, that -1 ATR right now is situated at $4. So yeah, that would be a really sucky loss. But with this lengthy, and this is a really long trigger, really, really long. And, that's just indicative of what we were talking about back here, where it's, in a decent sized range, but it is in a range and it is putting in a lot of action within that sort of boxed in space. And, that pent up energy wants to go somewhere. We have a very obvious catalyst for it coming up in the morning. Could that be the catalyst that sort of, pops open the box? Now, the big sort of warning I will give here, the big cautionary tale that I will tell, is that just because the TTM squeeze indicator is triggering and fires doesn't mean that it has to go up. This isn't an indicator that says when this thing turns green, that means go, and go means to the moon. It could go up, yes, could be pent-up energy, ready for a big move, right catalyst comes along, and bang, she goes. But it could also mean that the floor gets pulled out from under and it drops heavy. The TTM squeeze indicator is looking for an outsized move to take place in the near future, aka when it fires, when it turns green. And that outsized move can come to the upside, but it can also come to the downside. So as terrific as it could be to the upside, it could be equally as unterrific to the downside, and probably more. The third thing I'll say about it, as you can see sort of right here, it can trigger and fire and not much of anything happens. And, maybe there was a little bit of a move here, but it sort of quickly recovered and just sort of ended up relatively in the same spot that it was when the fire happened, which was on this candle right here. Right? You see that cursor mark there. It's, right through a bunch of the price action that's been put in recently as well. So sometimes, the indicator, as with every indicator, it's not 100%, but if it plays out and you caught it, you look like the smart guy. But, it's a tricky one because, like I said, you're sort of like, you're hoping for a win on 33% chance, because you could say there's a third chance that it goes sideways, nothing happens, a third chance that it goes down, and then there's your third chance that it goes up. So you put your chips where you think, where you feel best about, and you deal with the consequences. So that's my look at AG. We'll see what happens. It won't take us long to find out. By the time we wake up in the morning, we might have a good indication, or things might be already off and running in one direction or the other. Let's just hope it's not a big snooze fest. It's always unfortunate if you get a really obvious catalyst like earnings, one of the biggest catalysts that comes along every quarter, and you have this lengthy trigger, setup is looking good, and like I said, just looking for explosion. It could be explosion down, could be explosion up. And it's just really sad when the catalyst comes along and it's just a snooze fest. So we'll see what happens, but I thought I would just sort of point this out and see what folks thought. All right, folks, I hope that you had a happy hump day. And as always, I appreciate you watching, and I will see you in the next video.